Hi friends, let's take a look at Tezos again together. Now look at that, just looking at this is the 24-hour chart. I've got the Bitcoin pairing up to begin with, and we'll look at the dollar pairing soon. But look at the wicks here coming in like I put my own computer together there the other day. Not this one I'm using right now, but another one. And yeah, this reminds me of the pins on the motherboard, you know, like the sharp wicks here. And this could be one of these sockets coming in to, you know, anyway, visual stuff. That's what that looks like to me. What's happened is we've come up and our sort of our little pins have pushed against the 50%. Peter Brandt calls them spindles, which I think is a cute thing. I think it's cute, you know. As a guy who's very wealthy and successful and old, he probably wouldn't like me calling it his chat cute, but yeah, he's a cute little Peter Brandt with your pins and your spindles. Huh. Anyway, yeah, so like that's nice, and we've hit off that a bunch of times, but you know we've managed to maintain ourselves more or less in the areas that we need to see. You know, kind of looking at this 236 here, we're just like right in at it. I want to see us moving up above it, obviously above 3,009 Satoshis. We're 2 Satoshis or whatever below that at the minute. We've had a positive move on today's price action in general, you know, compared to like as we moved down yesterday, moving down yesterday as a result of the Bitcoin pairing, moving up today perhaps as a result of the Bitcoin pairing. If we go down to the 1 hour time frame, you can see this huge volatility having come in here as a result again of the Bitcoin pairing, really more so than the the Tezos sort of, you know, it's not like the Tezos side of things driving the market overall, really. Going out of the 1 hour because it's crazy. Looking at the 4 hour, sort of, you know, look, this is a descending broad and wedge type structure. Weirdly, you know, really horrible looking. Is this like overall just, you know, like if is it something like this? You know, there's Wick City here, and that's one of the things that makes me think, you know, that there's not a stability here as we're doing this. Volume's increasing as generally speaking, there's a sort of slight upward trend. Pardon me. But we haven't got the bodies closing up high enough for that. This was our previous high here, and since we've actually only had lower highs as the volumes increase, you know, I want to see this kind of resolve itself towards the upside, obviously. Let's go look over at the dollar pair though to get a better indication. Now, of course, the prices came up there and touched their $3.10 target. Whoop, that's fantastic. We did what we wanted to see happen. Taking out the oscillators down below though and saying, you know, actually looking between these previous highs and whatnot, we've got a bit of bearish divergence here subsequently, since this here is drawn down the way at the moment. So, you know, that's a warning sign for us. It's nothing more than a warning sign. In many ways, we could say that this warning sign is telling us, you know, not to the warning sign, whatever the warning signs, you know, that there's this measured move isn't necessarily going to happen overnight, you know, for us, and patience is required to an extent. Okay, so the trend is still remains towards the upside though currently, you know, with the highs and higher lows, etc., etc. Will this eventually form part of our local high and immediately dropping into the sort of local low? Who knows? You know, it could actually come all the way down and retest this area. As we've seen here, it's retested the 50 and the 200 simple moving averages as well here, and we currently find the prices at 285. Well, 285 is an area that we spoke about enough times as well on the way up here, looking to the left with these highs and everything else, where we want to see the prices maintain above them. We're below the 21 EMA at 290, and this blue line here at 290. Yes, so that's not ideal, absolutely not. But if, you know, so long as this turns out to be the higher low, then that's okay. The warning sign is there, but you know, look at the volatility. We spoke about this quite a lot yesterday as well. That's the 4 hour time frame. We're still moving down the way on the ADX here in this one, by the way, down to the 11. So the volatility hasn't like gone away. I want to see it turn around, but you can see here, and you look down to the lower time frames as it comes down below 15, that the volatility comes in. It's something to look out for when you're trading, I suppose, in general. And the 4 hour one is just seeing it shooting towards the upside in terms of the strength of trend. You know, I want to see this translate into the bigger time frames and have this move towards the upside and have the DM positive, the blue line there, remain above the red line, and that's to try and kind of release the shackles of all of this. Now, this inverted head and shoulders concept, now I don't like inverted head and shoulders at the end of an upward trend, which we spoke about. Shout out again to Ross for this one, by the way. You know, trading off the back of this would have meant that you were looking here and saying you had a measured move off of it going up towards these areas, and you know, fair play, saying all this sort of stuff. You'd be looking at 786 and a 236 Fibonacci retracement over here for that sort of first couple of profit taking targets, not necessarily the measuring stick itself necessarily, but a combination of these things, you know. And 320 still remains as our target towards the top side, really, for what we want to see happening. It's not actually inverted head and shoulders because of the sort of just the textbook definition of these things means it isn't. Psychologically, though, you know, you can see that as you break above previous highs, having come up and tried them again, you know, then you've got various different ways of looking at it. And again, if you want to take the time to look up what the cup and handle psychology of this all is, then you would see what the psychology behind cup and handle is. That it always seems to work around the same sorts of ways when you're looking at Twin Peaks and people saying, well, you know, well, we came up here, failed, came up again, failed a second time. If there's a shakeout towards the downside, respecting this upward slope, this downward sloping trend line more or less, and avoiding, you know, breaking this structure of the sort of inverted head and shoulders by going down again past this shoulder and the head, then, you know, you could be looking towards that. And what would that kind of look like? Well, perhaps like a cup with handle kind of thing here as people get shaken out and we move towards the top side again. And then, you know, it's the same sort of concept and you've got the same sort of measured move type things or whatever anyway here with this sort of chat, and you stick it back up there, and then you still look and you go, okay, look, we want to get to 320, right? So first off, let's try and get a close up above 310. If you're just trading this though, 310 was your profit taking target. Well done if you took it there. Indeed, if you were shorting this thing, then also well done. Looking at this in terms of measuring this, measuring the, oh my god, how do you want to make it more difficult for yourself? Measuring this down the way, you know, you're looking at a 13% move today, just purely on the three sort of the high three past, you know, 310, shorting it from 310 down, and then saying I'll take profit at 270. Oh, that you might have thought that might have taken you a week or more to get that, but instead you've got it in a day, and that's a solid 10%. So well done anybody who did that. I'm not a financial advisor, none of this financial advice, but well done anybody who did that. Now the sort of the reverse story comes back into play again. Can we go up from these areas that we saw at 370s and all the rest of it, or you know, this support line at 376 or 276, or even where we are now at 283, which we spoke about enough times in the recent past, which is currently forming a sort of higher low, and move up towards our previous highs at 290 and whatever, and there's plenty you know, top side sort of profits to be made there, 6%. You know, if it went back up to where it was from even just from here, then you're looking at another 10% move. So managing your risk using this line here at 290 would be something to look at in the meantime. 290 and 275 and 310 are the three areas to look to. Breaking down below there, you're looking at 265, and of course the 21 EMA just as a sort of handy level as well itself. It's hard to see, but it's coming in at 275. That's going to do us for today. You know, there's little things as well to look at, like the divergence between the price exchanges. We like doing this. It's remained more or less that sort of 20 cents throughout this period of the last couple of days. I haven't bothered talking about it because it's still about 20 cents. It's not changed much. And you can see here the various different exchanges that there's different shapes on the go. You know, currently we're getting quite extended into this one here, this symmetrical triangle that we were talking about. Obviously, at some point, I mean, I have it on the chart, so we're obviously talking about it at some point. We're quite far into this here. So, you know, at some point this is going to break, something's got to give in terms of measured moves. Let's just call it the ascending triangle that we're talking about there. And in terms of measured moves, like looking towards this thing, of course, then it takes you up to sort of the 360 area. So you're like huge profit potentials in terms of the moves up there if you get an upward side move. Moving down towards the downside, then you're looking down towards the 200 simple there at $2.02. But of course, the 225, 230 area, of course, is where you'd be looking at for a turnaround should the prices break towards the downside. And the story is just the same across the board. You know, really, like these lines, we're still being respecting them. This is where I talked about the head and shoulders with Ross, by the way. So shout out again to Ross. This is what we're talking about here. These two lines here and everything else. So, you know, we've had this play out. If you were just purely trading this, I think you're more of an investor type and not like, you know, saying yes, sweet, we've hit that three, we've got close enough to 316, we're at 315, I'll take profit or whatever. I don't think you're thinking along those lines, or whatever, 310, I'll take profit, etc. But we've seen it playing out. Okay, this is how we were talking about things, and can this happen? We need to see the prices, of course, go above that 318 area, move towards the top side for us to be, looking towards the sort of the final outplay of that 360s area. Thanks so much for tuning in. Catch you next time. Really appreciate it. Mutual appreciated deal. And I'll catch you next time. Thanks for tuning in. I share this video with a friend if you've got one that you think would like it. I've been Rocky Outcrop, not a financial advisor. Can't remember if I said that at all yet. And yeah, I really appreciate you tuning in. I really appreciate you watching till now massively. And thanks very much. And join the family if you haven't already. Discord link below. Hit the subscribe button. Yada yada. Mutual appreciated. Catch you next time.